At 6:41 in the morning, inside a quiet ranch-style home in Sarasota, Florida, 72-year-old Linda Harper stood motionless near her kitchen counter, wearing a pale blue robe and holding a leather wallet that suddenly felt heavier than a brick. The coffee had already gone cold. A Medicare statement sat unopened beside the toaster. Outside, sprinklers clicked softly across perfectly trimmed retirement lawns, while neighbors walked small dogs beneath palm trees glowing in the sunrise. Ordinary American retirement life. Peaceful, predictable, safe. At least that's what Linda believed. Until her phone lit up with 3 notifications in less than 30 seconds. Bank withdrawal completed. New credit inquiry detected. Medicare account access updated. Linda's breathing stopped. She hadn't touched her accounts. She hadn't called Medicare. And she certainly hadn't approved a $14,200 transfer from her savings account at 5:58 that morning. But somewhere inside the engineered system, someone already had enough information to begin dismantling her financial life piece by piece. Listen carefully, because in 2026, the most dangerous thing many retirees carry is not cash, it's information. Tiny pieces of paper, numbers, passwords, cards, old habits, the kinds of things millions of seniors still keep inside wallets every single day without realizing those items can unlock retirement accounts, trigger identity theft, expose Medicare fraud, drain checking accounts, and accelerate what experts quietly call financial elder exploitation. And the terrifying part, most retirees never realize the trap until the damage is already spreading through every system connected to their name. The bank, the IRS, Social Security, Medicare, insurance portals, credit bureaus, retirement accounts. Because modern theft no longer begins with breaking into your house, it begins with breaking into your identity, and your wallet may already contain the keys. This is the part nobody tells you. Retirement theft in America has become bureaucratic, mathematical, engineered. The scammer does not need to rob you at gunpoint anymore. They just need enough information to impersonate you inside systems designed decades ago. And once those systems open, the clock is already ticking. Linda discovered this after losing her wallet for less than 40 minutes inside a crowded pharmacy. 40 minutes, that was all it took. Not long enough to panic. Not long enough to cancel cards. Not long enough to think disaster was possible. But by the time she got home, the second blade had already fallen. A criminal had photographed nearly everything inside. Her Medicare card, her backup checkbook, a folded paper with account reminders, even an old Social Security card she carried just in case. That phrase alone has destroyed thousands of retirees financially, just in case. The hidden rule in 2026 is this: anything connected to your identity can become a weapon against you. And seniors are now one of the biggest targets in America because retirees often control the largest pools of accessible wealth: home equity, IRAs, brokerage accounts, pensions, monthly Social Security deposits, and predictable routines. The system is counting on you not knowing this. So today, we are going to expose the 5 things retirees should never keep in their wallet in 2026, because one mistake, one stolen purse, one distracted moment at a gas station, one restaurant table, one pharmacy counter, can trigger a financial chain reaction that takes years to repair. And for some seniors, the money never comes back. Trap number 1, your Medicare card. This one shocks people, because millions of retirees still think of their Medicare card as harmless identification. It is not harmless anymore. In 2026, your Medicare number is directly tied to your healthcare identity inside one of the largest bureaucratic systems in America. And criminals know exactly how valuable that is. Listen carefully. A stolen Medicare number can be used for fraudulent billing schemes, fake medical claims, equipment scams, prescription fraud, and identity verification processes connected to healthcare portals. That means someone can potentially use your medical identity while you remain completely unaware. The part nobody tells you? Medicare fraud often remains hidden for months, sometimes years, because many retirees never fully review claim statements. And during that time, scammers can quietly bill thousands of dollars under your identity while creating a paperwork nightmare that follows you later. Linda learned this after investigators discovered medical supply claims filed from another state under her Medicare number: wheelchairs, diabetic equipment, home treatment services, thousands of dollars in fake claims. And suddenly, her medical records became contaminated with services she never received. This is where the trap becomes terrifying, because once fraudulent information enters the system, Removing it becomes slow, bureaucratic, exhausting, and emotionally draining. Hours on hold, affidavits, identity verification, case numbers, letters, reviews, appeals. The engineered system moves slowly when ordinary Americans are trying to fix damage. But the fraud happens instantly. Stop the video. Look inside your wallet right now. If your Medicare card is sitting there daily, you need to understand the risk, especially because seniors over 65 are increasingly targeted specifically for healthcare identity theft. The government keeps the receipt, and the scammers know exactly where the weak points are. Trap number 2, your Social Security card. This may be the single most dangerous item retirees still carry, and millions still do it. Some carry it because they always have, others because you never know, some because they fear forgetting the number. But in 2026, carrying your Social Security card inside your wallet is like carrying the master key to your financial existence. That number connects to tax records, bank verification, retirement benefits, credit applications, insurance systems, government databases, medical systems, investment accounts. One stolen Social Security card can become the beginning of complete identity reconstruction. And once criminals combine that with your address, birth date, or Medicare information, the quiet confiscation begins. This is where families lose everything. Because identity theft against retirees does not always look dramatic at first. It begins quietly. A new account opened, a small loan inquiry, a tax filing rejection, a changed password, a suspicious login, a delayed Social Security payment, tiny cracks in the system. Then suddenly the financial guillotine drops. Linda's neighbor Robert, a 77-year-old widower in Arizona, discovered someone had filed a fraudulent tax return under his identity before he even submitted his own. The IRS froze his legitimate refund for nearly 11 months. 11 months. Imagine being retired on fixed income while the system investigates whether you are actually you. That is the emotional brutality of identity theft in retirement. And the older you are, the harder the recovery process often becomes. Because the system assumes verification should be simple. But seniors dealing with health issues, hearing loss, memory concerns, caregiving stress, or widowhood often struggle to navigate the endless bureaucracy after fraud occurs. The trap closes slowly, then all at once. Trap number 3, old checks. This one sounds harmless until you understand the hidden math behind modern banking fraud. Retirees often keep old checks for emergencies, especially seniors who grew up balancing checkbooks carefully for decades. But a single check contains an astonishing amount of financial information. Routing numbers, account numbers, full legal names, addresses, bank institution data, sometimes even phone numbers. To criminals, an old check is not paper, it is access. And in 2026, fraud technology is moving faster than most retirees realize. Check washing, digital duplication, counterfeit reproduction, ACH fraud. The methods keep evolving. Meanwhile, many seniors still carry checkbooks inside purses and wallets like it's 1998. Listen carefully. A criminal does not need to empty your account immediately. That's the hidden rule. Sophisticated fraud often begins with testing small withdrawals first, tiny unnoticed charges, small ACH drafts, minor account movements, because scammers know retirees may not check online banking daily, especially older seniors. That delay becomes the opening. And once bank fraud expands into linked accounts, the damage accelerates fast. One compromised checking account can expose automatic bill pay, brokerage transfers, retirement income deposits, mortgage drafts, insurance payments, and tax refund routing. Everything becomes connected. This is the engineered danger of modern retirement banking. The systems are integrated, so when one door opens, multiple systems become vulnerable simultaneously. Linda discovered this after 2 counterfeit checks surfaced from her account nearly 6 weeks after her wallet incident. By then, the fraud investigation had become exponentially harder, because time protects the institutions, not the victim. The longer the delay, the more complicated the recovery, and the clock is already ticking. Trap number 4, passwords written on paper. This one may trigger more silent retiree disasters than almost anything else on this list, because many seniors do not trust digital password systems. So they create hidden paper notes, folded slips, tiny notebooks, codes written beside phone numbers, reminder hints, PIN combinations, and then they carry them directly beside the cards. Those passwords unlock. Listen carefully. This is where the trap becomes brutally efficient. A thief no longer needs to hack anything. You handed them the roadmap, retirement accounts, email access, bank logins, insurance portals, social security accounts, investment dashboards. Everything begins collapsing once email access is compromised, because email has become the command center of financial life. Password resets, verification codes, account recovery links, bank alerts, tax forms. The hidden rule is this: if criminals gain access to your email, they often gain access to everything connected to it. And retirees are particularly vulnerable because many still use simplified password habits developed years ago. Birth years, pet names, anniversary dates, simple PIN patterns. The system is counting on you not adapting fast enough to modern fraud realities, and scammers know it. A retired couple in Pennsylvania lost nearly $118,000 after thieves accessed an email account connected to investment alerts and banking notifications. The couple thought the fraud was being handled. Meanwhile, criminals quietly changed verification settings behind the scenes. That's the terrifying part. Many retirees believe fraud stops after reporting the first problem, but the second blade often comes later, weeks later, after the victim relaxes, after security fatigue sets in, after the systems quietly continue updating in the background. This is why retirement fraud feels so emotionally devastating. It creates paranoia, distrust, exhaustion, fear of answering phones, fear of opening emails, fear of checking accounts. Financial theft becomes psychological theft too. Now, trap number 5, using debit cards like credit cards. This one may be the most financially dangerous habit on this entire list, because many retirees still think debit cards are safer simply because they avoid debt. Emotionally, that feels responsible. But the hidden rule is devastating. Debit card fraud often hits your actual cash immediately, not a credit line, your money, your checking account, your retirement deposits, your bill pay funds. And when retirees live on fixed monthly income, timing becomes catastrophic. Imagine waking up and discovering rent unpaid, utilities pending, prescriptions delayed, automatic insurance drafts rejected because your checking account was suddenly drained during a fraud investigation. This is happening across America right now, quietly, especially among retirees targeted through gas station skimmers, restaurant scanners, fake payment terminals, online breaches, and phishing attacks. Credit card fraud can usually be disputed before your cash disappears. Debit fraud often creates immediate liquidity crisis. That distinction matters enormously after retirement. Linda learned this the hard way when temporary fraud holds froze access to her checking account during the investigation. For 19 days, she couldn't access portions of her own money. 19 days, and suddenly ordinary bills became emergencies. That's the emotional violence of financial fraud in retirement. The system assumes delays are manageable, but retirees often live on carefully timed income cycles. One disruption creates panic. Now let's talk about the real danger. Because the wallet itself is no longer the issue. The issue is outdated retirement behavior colliding with modern digital exploitation systems. That's what nobody tells seniors. The world changed faster than the habits did. The same generation taught to carry paper checks, write passwords down, keep important cards nearby, trust institutions automatically, and avoid credit is now facing a digital fraud economy designed specifically to exploit those habits. That's the engineered system. Cold, mathematical, efficient, and retirees are standing directly in its path. Now here's the survival strategy. First, remove your social security card from your wallet immediately. Memorize the number or secure it safely at home. Second, carry your Medicare card only when medically necessary, not daily. Third, never carry spare checks unless absolutely required. Fourth, stop carrying written passwords inside wallets or purses, especially beside identification cards. Fifth, consider using credit cards for routine purchases instead of debit cards when possible for stronger fraud protections. Sixth, monitor account alerts aggressively. Every transaction, every login, every password reset, because early detection changes everything. And finally, understand this clearly. Retirement security is no longer just about saving money. It is about protecting identity. Because once your identity is compromised, every system connected to your retirement can begin turning against you simultaneously. The IRS, the bank, Social Security, Medicare, insurance systems, all connected, all vulnerable, all capable of becoming bureaucratic nightmares after one simple wallet theft. Save this video, comment your age and state below, and send this to every retiree you know, because most seniors still carry at least 3 items from this list every single day, and they have absolutely no idea how dangerous those habits have become in 2026. My name is Ivana Forbes. Subscribe now for more retirement survival warnings, IRS traps, Medicare dangers, and hidden financial rules threatening ordinary Americans over 60. Because the greatest retirement threat is no longer just inflation or market crashes, it's the invisible war being fought quietly against your identity while you still believe your wallet is harmless.